Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by the Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. It's been an interesting week in the markets that we've seen. We're going to talk about a turn of events that's happened in the soybeans. If you didn't catch it on my Friday market report with one of my guests, it's definitely going to catch your ear today. We're also going to look at a cattle on feed report that came out, what's going on in these milk prices with the dairy industry, and we'll talk a little about breakout or a melt up that's happening in the market. I'm intrigued, and I'm sure you will be as well.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back as we continue here. And joining me on the screen, you see Sue Martin. She's with Hackett Investment out of Clarion, Iowa, and Shawn Hackett with Hackett Financial Services. He is based out of Florida. And let's start out talking about, Sue, I got to ask you, because you're my soybean go-to, this turn of events we've seen in this soybean market, and what does it mean for our producers?
Well, certainly we've had a very nice rally in the bean market, and we had some timing that struck a low here. Was due last Friday and into Tuesday, but because of Martin Luther King holiday, it was like circling around a weekend. But the market broke into that, as did wheat, and then the market turned and took off with a vengeance. Now, some would say, well, it was extremely oversold. That may be true, but the fact that we came up and took out the highs thus far on the beans on this rally, I thought was impressive. There's a little resistance, not much higher, but around 1440. Then if we can get through that, 1440, 43, then we could probably see beans make it up to around $15 or higher. But that's going to take some time, and we're going to have some continued weather concerns out of Brazil. Right now, it's basically thought that beans will suffer more than the corn crop at this time until the safrinha gets in, which accounts for 70% of their production. But once that gets in, then if the weather stays hot and dry through February into March, we might have a different story there. But the key that I talked about on the final bell was the news that came out of China this week, yesterday actually, and it basically, all we've heard is how how U.S. bean exports to China are down so much from a year ago. That's what we heard all of last year, and how Brazil was picking up the slack. It wasn't the case. It was totally the opposite. When China came out with their export data, it was very astounding. It showed that we had actually exported much more beans last year, little over 32 million metric tons, as opposed to 25.6 million the year before. And what was the real kicker was Brazil actually exported around 58.2 million metric tons compared to a little over 64 million metric tons in 2020. They were totally, the USDA has to know this is going on. And I would have to say, we've been very suspicious all along, thinking Costco International Grain was getting beans. They're just cagey how they're doing it.
Having said that, Shawn, what are your thoughts? What are you hearing when it comes to this market trade with China and the influence that we're seeing on our markets here in the States?
China not telling the truth is a commonality that we've been dealing with for a long, long time. You never trust what they say. You only trust what they do if you can figure out what they're doing. That's why you have to really look for cash basis, spreads, and other metrics that we have that we can rely upon more clearly in real time to get to the bottom of the truth of what they're actually doing. At the end of the day, they need our soybeans. They're going to continue to need our soybeans, and especially if this renewable diesel trend in the U.S. kicks in like it looks like it will, just the soybean situation from a demand pool perspective looks very, very promising as we move into the latter part of the year. And of course, if the South American crop has been permanently knocked down from the record it was supposed to be, it just seems like there's not going to be enough beans to go around, at least at the prices we're currently at. So I think her view of a possible target to 15 does not seem outlandish to me. It seems like it's a possibility going forward here. So,
Well, having said that, there's the renewable diesel that's coming out of California that's getting a lot of talk right now. Does that make you guys nervous from a bean perspective of maybe not having enough in country? Shawn?
well, I don't think we have enough. If you look at the numbers that they're going to need, and you look at how much beans would need to crush in order to make that happen, we need to plant a lot more soybean acres. And maybe that's what the market's starting to try to figure out, that maybe it needs to do that. I mean, we had some very, very good moisture in Argentina after some really high heat. We should have been really taking a nosedive here in soybeans. And maybe this idea that this production for soybeans needs to be much, much larger under any and all circumstances, maybe overriding some of the bearish weather factors right now in Argentina that we're now seeing. So I think it's something so much reminds me of the ethanol gold rush in the 2000s, when the demand just drove the corn market higher, drove the acres higher, and really created a bullish environment for grains overall. It almost seems like the same record being played, just with the soybeans being the leader on that front.
Sue, I see you kind of shaking your head in agreement with that. It's going to make for an interesting bean trade.
Well, it is. And, just today, Canada announced another canola crushing plant to be online by 2025. So, they've already announced 4, and we've got, announcements of crushing plants coming online here in the US. And my one question mark is, these are all oil seeds. And then you look at how the US consumer, and not to mention around the world, but the US consumer buys cooking oil, canola, corn oil.
Mhm.
There you go, corn oil, and soy oil. So, you've got to think, okay, what's that price going to cost when you got so much oil being crushed and sent over towards this renewable diesel and bioenergy? It just makes me wonder what prices are going to do, but that could show some maybe more demand towards corn oil.
All right. Well, as we continue here at the Nebraska Soybean Board weekly market roundup that's being brought to you by the Nebraska soybean farmers and their checkoff, let's talk cattle on feed report. Sue, it came out on a Friday afternoon. Did we see those numbers increase because of cattle leaving those wheat fields?
Yes, we did. And we will continue to see more. Cattle are leaving wheat pastures at about a good month earlier than normal. And so when we looked at the cattle on feed numbers, 101%, average trade guess was looking for 100. So maybe that's a little negative, I suppose, but nothing special. Placements came out, and I think that's what broke the market today, was the placements expectation because of cattle moving off of wheat pasture, thinking the placements could be higher than what the trade was guessing. The highest guess was 105%, and it came out at 106%. Now, granted, most of those cattle are very light weights, and that means more corn usage for feed, and on top of it, longer in the feedlots. So I think that, the first impact of that placement number might push us down. It's the highest number, by the way, since 1996. And so, I leaned a little bit on the negative side, but we might have priced some of that in. I think you come in here next week, start off a little bit on the weaker side of that, and then that maybe turns us. Now, the marketing number was pretty equal to a year ago. And that was interesting because we've been hearing all this talk about how because of Omicron, we're backing up numbers, but we're really not.
Talk about this dairy prices, Shawn, that's been happening as of late. What are we seeing for our producers, and is there still a chance for some profitability?
Well, I think you have to separate class 3 versus class 4, Susan. Class 3, which is mainly cheese, had a spike trade on the idea that a lot of these cheese plants were operating at less than full capacity because of worker shortages from Omicron, and that created a shortage in the market. But we know from looking at the packing houses in the beef industry, at some point you get better and you go back to work, and it looks like those plants are starting to come back online, and the cheese production is starting to rebound. And we've seen the class 3 market take a hit here over the last week on some of those fears coming back. However, class 4 market, which is not really impacted by the same dynamics, continues to power ahead, which is really driven by the shortage of milk in China. When you look at the China milk price, it is at all-time record highs today. And of course, they solve their milk problem by buying milk powder, not actual cheese or butter or those kinds of things. So long as that price in China remains at record highs, they're going to continue to be large buyers of powder. And of course, the class 4 market is really the milk powder market driving higher. And remember, when the U.S. government did the food box program and they gunned the class 3 market relative to class 4, we're now getting the exact opposite. We're at almost an historic premium of class 4 to class 3. So it's all Newton's principle. For every action, there's an equal and opposite reaction. So we're really pretty positive overall on the market going forward, Susan, albeit maybe a little bearish class 3 for a little while here into the end of the first quarter.
You wanted to talk a little bit about this breakout or melt up that's going to be happening in the markets. So in the next 35, 40 seconds, tell us what's going on.
The BLS cash commodity index is broke out to an all-time record high. That either means it's going to run away to the upside, or we're going to have what they call a failed breakout and a turn back down, and that's a very bearish pattern. We have yet to determine this. The Brazilian real has broken out to the upside on short-term charts, which might push us to consider that breakout is actually going to be confirmed. Remember, everyone that I listen to is thinking that deflation's coming back because of the Federal Reserve raising interest rates and pulling back on money printing. Oftentimes, the exact opposite of the consensus is what happens. Jury's still out, but we kind of think we might actually be tipping ourselves to the melt up at this point, given what's happening with the Brazilian real, which is usually a good benchmark for psychology in the ag markets.
All right. Well, thank you to both of you joining us this week. Want to remind folks that commodity futures and options do involve a substantial risk of loss, and they're not suitable to all investors. That is the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff.